And I'm back again. All right, I'll just set my camera a little bit. The background is a little messy, but today we'll have to actually bear with that. I will just switch off my fan. I think that will disturb my voice otherwise. Should I get up? Yes. All right. So I have switched off my fan now. Hello everyone, welcome back to Zbit Exchange, and here we are. I'm Juhi Singh, and again we are live here today to talk about so many things, Bitcoin and cryptocurrency. And today, like I gave you a sneak peek yesterday, that we are going to do blockchain. We are going to deep dive into blockchain. So that's what exactly we are going to do on this live stream. But again, as a rule, let's wait for about 1 or 2 minutes. Let's see how many of you join us. And till then, I guess you can revise whatever we have done yesterday. And you can also drink water, keep yourself hydrated, because it's a long session. Obviously we have so many things to cover, we have so many topics that we want to talk about, so it becomes very important for us to actually be hydrated and stay connected at all cost. Yeah, okay, just give me 1 minute, I'll be back on camera. Yes, now this is a studio which is voice friendly. All right. So here we are going to talk about blockchain today. We are going to understand what blockchain is all about, and why do we call it the backbone of crypto. See, blockchain is something that we have to know, that I have always talked about what blockchain is. Like, I've always explained to you about what blockchain is, and it's the blockchain that actually makes crypto what it is, right? So obviously it's a backbone. We believe it's a backbone, but how exactly is it helping crypto is something that we are going to actually tackle down in this session. So we'll get started, and as a part of crypto 101 today, where we are going to understand blockchain. uh, it can be due to any reason for you to join this stream. It can be due to curiosity, it can be due to career interest, it can be because of pure confusion. But I must tell you that you are in the right place, because here at Zbit, we make sure that what we are explaining you is not only explained to you in a simple manner, but we also give you we'll give you those examples, the real life examples, where you understand how exactly crypto is working and what exactly crypto is. And we are not leaving anything out, so that you understand each and everything about crypto and then make a decision about investing, right? So that's what we do at Zbit. And yes, of course, if you want to understand more about cryptocurrency in simple terms, you want to understand about what the jargons are all about, you want to understand how everything works in crypto, it's time for you to subscribe to Zbit, and also press that bell icon so that you never miss an update from Zbit, and you always keep learning and stay updated from the latest news and trends, right? So now, before we dive in, let me just take a quick pulse check. Okay, how much do you already know about blockchain is something that I would like to understand. How much do you know? Is it like you have one option, which is nothing? You have just heard about it, it's just a buzzword for you. Second is a little. You kind of get it, but you are still a little foggy. Yeah. Third is, I could teach this. So bring on the hard stuff. Yes. So basically, you are someone who is knowing nothing about it, knows a little about it, or you're absolutely well versed about it. Right. So that's what the three options are with you. So let me know that how much do you know about blockchain before we actually get into the topic. See, no matter where you fall on this question, whatever your answer is, This is a session that is designed for beginners. Okay, there's no jargon, there is no tech savvy words, there's no tech heavy walls for you. It's just simple, it's a clear concept through stories, analogies, visuals, and real life examples. Okay, so what are we going to cover today in this live stream? See, we are going to know what blockchain actually is, right? So there will be some things that will be repeated, but obviously it's kind of a revision for you so that everything gets very much inculcated in your brain and you never forget about it. It will be that easy, okay? So how it works behind the scene is something that we are going to understand, and you know why this is a technology for everyone, be it for a bank, be it for an artist, it's for everyone. So why is that a case? Okay, but then first things first, let's break down what even a blockchain is and why should you care. Okay, so let's say you're a part of a community of friends. Okay, so you have these 10 people who are in your community and they are your friends, and every time someone lends or borrows money, you all note it down on a common notebook. Okay, now this notebook is shared with everyone. It cannot be edited or erased without everyone knowing about it, and it is always updated with new entries one after the another. Okay, this example I've given you so many times, right? So many times that you know you are a group of friends who are sitting together, and there's a bunch of money that you have, the transactions that is happening, the notebook that you have, it's all shared, and all of you know whatever is going on. It's very transparent. No one can actually hide anything over here, right? So that's what the case is here on Bitcoin. Now, this notebook that I just told you about is called blockchain. So it helps people trust each other without needing a middleman like a bank. And that's a big deal, right? Like I told you even yesterday in the stream, that when you want to give money to your friend, be it 500 rupees, be it 1000 rupees, be it 10,000 rupees, doesn't matter, right? But if you are going through traditional way, there is a bank involved in between which actually messages the sender and the receiver separately, where they say that okay, your money has been debited, your money has been credited, and now your account balance is so so and so, right? But here, who was regulating this whole transaction? The bank was regulating the whole transaction. Whereas when it comes to blockchain, there is no middleman. Now, this is obsolete over here. This is like literally you are doing it yourself. There is no middleman involved in this, right? Now, see another example that I can give you. Now, back in 2008, okay, let's go back to 2008. This was after the global financial crisis. People were really angry, they were really confused, you know, banks were failing, and people were losing their faith in financial system. Okay, it was in the all time low at that point of time. Why? Because there was a financial crisis. Okay, then in 2009, let's go 1 year forward. In 2009, something new showed up, that was Bitcoin. Okay, that I told you even yesterday, 2009, Bitcoin was first mined, right? Bitcoin came into picture, and it was created by, I told you yesterday, who created that? It was Satoshi Nakamoto. Okay, so Satoshi Nakamoto created it, and it came with a unique technology, you know, the blockchain technology, obviously, and a digital system where no single person was controlling the data, or not one company was controlling the data. It was all something that was very very transparent in front of everyone. Okay, whatever transaction is happening, how many ever Bitcoin is there, everything was absolutely crystal clear, right? So the very first message that was recorded on Bitcoin blockchain, it read like this: the Times 03 slash Jan slash 2009, Chancellor on brink of second bailout for banks. This is what it read. Okay. Now, this wasn't just a message, it was a statement. Okay. Now, this new technology was born. and it was out of the desire for transparency, control, and for fairness. See, because you don't know how exactly bank is managing your money. You don't know how exactly your money is being used when it is kept in a certain space. That's when the doubts actually surrounds your head, right? And if imagine if you have put your faith on something or someone to actually keep your money safe, and they are unable to do that, right? And you have to face such a huge financial crisis, right? That's where the problem surrounds. That's where you start thinking that, okay, why am I trusting this? Why is this process not transparent? Because once a problem happens, the person responsible is not exactly answering your questions. You as investors would like to know what is happening. You would like everything to be transparent. If something went wrong, what went wrong? If something was right, how is it going right? Everything is supposed to be on pen and paper, and everything is supposed to be in front of the investors so that they know what is happening, and it brings that trust into them to actually go ahead and invest into something, right? So keeping all those things in mind, only the Bitcoin was actually made, right? It was actually developed. And when it came into picture, this was the very first message that came out. Okay, I'll just put down this message on the chat so that in case you missed it out, you will know it. Okay, so this was basically a statement that people, Satoshi Nakamoto actually put in. The first statement. All right, there you go, and there you have it on the chat now. Okay, so you can see that, okay, this is the statement. The Times 03 slash Jan slash 2009 Chancellor on brink of second bailout for banks. Okay, so this was a statement that was actually passed. Now, what should you expect in the next 2 hours? Okay, this is just a brief that I gave you about Bitcoin, but we are here for about 1.5 2 hour, right? So, what are you going to expect over here in this live session? It's stories that make sense, analogies that makes things click, and a chance to ask any question without any fear. Okay. Now we are here to make sure that you walk away knowing what blockchain is, how it works, and why it matters for your life. Even if you never plan to invest in crypto, you should know about it. Okay, so if you understand it, it's okay if you are not investing into it. But if something is there buzzing in the market, it's absolutely important for you to know what exactly that is. At least you have an information on what it is, right? And then after that, it's completely your call if you want to go ahead and invest or not. Because, like I said, and like I say every now and then, time and again, I have been repeating this, that investment is all about how much of a risk you can take, right? Because investment is not something which is always like a green grass. It's not like that. It's not like a garden always, right? Sometimes it might be like a barren land where you are actually facing losses. It's a bull market or a bear market situation in the market, right? So it's very important to know what your risk appetite is, and if you don't yet know how much money you can risk as of now, and if you are not ready to risk it out, you are absolutely free to not invest. But learning is a step ahead. At least learning will make a difference, right? So grab your coffee, keep that window chat open, and let's get started. Okay, so again, for the people who have joined new in the session, we will get back to the origin story of blockchain. Okay, now this is when it was 2008. Okay, now in 2008 it was a dark time for global economy. Okay, you may have heard of the 2008 financial crisis. The banks have collapsed, millions lost their jobs, life savings just vanished, because now this market has completely crashed, right? Everything was on the brink of getting lost, right? Everything was collapsing, savings were vanishing. And this was the time People were actually losing their trust. Yeah. Say if you have 100 rupees. Now 100 rupees is not a big amount today, but imagine that this is the amount that is very big. Okay, now you have 100 rupees. Now because of a financial crisis and because of the banks collapsing, this 100 rupees, which was your savings, which you saved over a period of time, you actually lost it. How mind, like how it will be like struck in your head, right? How mindful you can stay now. You will absolutely lose your trust over everything. You will get angry, you will get confused, you will be all into like, okay, I have so many questions in my mind, but there's absolutely no one to answer, right? So many things that will come in your mind, right? But what was the reason behind this? See, most of the global financial system, it depends on centralized institutions. Okay, the bank, the government, the companies. Okay, so any financial system globally, which is dependent on centralized institutions. Okay, this is all of them. Like before 2008, obviously, most of the global financial system, it was depending on these centralized institutions. Okay, big banks, the government, and the people started to lose that trust in them. Okay, now imagine this. What if there was a financial system that didn't rely on banks? Okay, and one that could not be manipulated, misused, or hidden behind the closed doors. Okay, see, the scams happen because the transparency is not there, right? Let me ask you this. This is completely out of context at this point of time, but I would definitely want to know from the people who are here in the chat. If you know what is the story of Harshad Mehta, how many of you know about the story? I'm not saying that you have to know completely about it. You can have a little bit of knowledge maybe here and there, but how many of you know this? See, his story was something that actually made a lot of difference economically. Okay, many changes came into how banks function, obviously. So, for any change in the global financial market, there is some story which drives that change. Okay, the first ever change that happened with how the banks are doing their transactions and how transparent they have to be, it happened because of this one story, the Harshad Mehta stories, right? Now, when Bitcoin came into existence, this was because of a big financial crisis that happened in 2008, and people just started losing their mind and they just stopped trusting any bank or any government for that matter with their money, right? See, Harshad Mehta's story is very, very interesting, and someday we will sit with that also. But you know how it happened. You know that okay, banks could easily, people sitting in the banks that time could easily manipulate the entries because it was all done in pen and paper. It was not digitalized, right? And it was all done in pen and paper. And because this man was so resourceful, he was able to manipulate his way out of things, and he was able to get the entries manipulated too. So all these entries, because it got manipulated, the market then crashed. People started losing their money, right? Why was this possible? Because again, the system is not that transparent. This financial system that we were actually following was not really transparent, and people didn't know what was exactly happening with the money from while it was in between a bank to another, right? So yes, that was the time, and it's a completely different story. But what could we make out of this story? Like, when you lose that transparency, when you don't have that transparency, that is where the problem happens. And when you see everything transparently, when you see that, okay, you know what, I know where the money is going, I know how much of a transaction is going to happen, I know everything is there on the sheet and I can see it, and there's no one who can manipulate it. That's where the trust starts building. So this is what happened. Enters Satoshi Nakamoto. Okay, this was a mysterious figure, or it was a group. No one knows what exactly they are. Okay, Satoshi Nakamoto, if it is a single person or if it is a group of person, no one knows this. Till this date, no one has an idea who they really are. They have definitely changed how money works. They have definitely coined a new term, coined a new way how money will work in the market, but still we do not have an idea of who they are, right? Now, in late 2008, they published a white paper titled Bitcoin, a peer to peer electronic cash system. I told this. I even mentioned this yesterday that they published a white paper which was titled as Bitcoin, a peer to peer electronic cash system. Okay, now this was the birth of a revolutionary idea. Obviously, it was a revolution, yeah, right? Because there's nothing like there's some kind of hidden data, right? There's everything is transparent. You know how much of a bitcoin is there, you know how much of transaction is going on. Everything is so accessible, right? So that gave a birth, this Satoshi Nakamoto in late 2008, after publishing the white paper, actually gave birth to this revolutionary idea. Okay, now, another way to put it, now the revolutionary idea was that let's create a system where no single person, company, or government is in to control, but everyone can trust it. Okay, see, sometimes the system just works, right? Sometimes you just leave it, right? We say that, okay, let's take a leap of faith, right? Okay, let's leave it where it is, let's see where it goes, let's trust the process, right? So every time when we do this in our real life also, sometimes, it might be that you're losing hope because you're applying to so many jobs but you're not getting any answers. And that's when your friends, your family members, they sit and they tell you that, you know what, let's trust the process, don't lose hope, take a leap of faith. Maybe, you were trying in XYZ position, and people tell you that, you know what, take a leap of faith and let's try for this position, right? Everyone took a leap of faith for success, and that's what happened here also for Bitcoin. Okay, this is a process which just works, and you can trust it because even if there is not a single person involved in this, even if there is no bank, there is no government regulating it, but still you can still trust this whole process. Okay, and how is it that they plan to do it? See, there is no government involved. There's not a single person who is going to actually handle the datas that are going to be there, right? There's no company involved in this. So how are you exactly working this? How is this plan going to work, right? So this was with a brand new technology called blockchain. Yes, how will this work? Everyone had a question, right? Okay, cryptocurrency, got it. Bitcoin, got it. You can mine it, you can make millions of mining Bitcoin. But how is it going to work? How are we going to execute this plan? Enters blockchain. Okay, so what is blockchain in simple terms? If you have to understand, think of blockchain like a Google sheet that is shared with thousands of people. Everyone can see the entries in real time, but no one can make changes unless the network agrees. Okay, and once something is written, it can't be erased. Okay, so this is how it will work. So say for example, imagine that you and your friends are tracking expenses on a shared sheet. Okay, one person adds the entry, he paid 500 for a, say, pizza. Okay, then the rest of the group over there confirms that, yeah, this is correct, yes, paid 500 for the pizza. Now this is once approved, everyone in your group now approves of it, it gets locked. Okay, now it is locked, this information is locked, that paid 500 for pizza. Okay, now no one can delete it, or no one can secretly modify it later. Okay, because this is something that you have all agreed on, and then that, and only after that the entry has been made and the entry has been locked now, right? This is exactly how blockchain works. Okay, it's a decentralized, transparent ledger. It records all of the transactions that everyone can trust. Okay, now I told you that the first Bitcoin was mined in 2009. See, the first ever block that was mined was the Genesis block. Okay, when Satoshi mined the very first block of Bitcoin, this was in January 2009. They included a hidden message in the code. Okay, because obviously this is not physical money; this is all coded, right? And I have given you that message on the chat. Excuse me. Okay, sorry, let's move on. Okay, so yes, we were talking that when Satoshi they mined the very first block of Bitcoin, this was in January 2009. They included a hidden message in the code. Now the message I've given it to you on the chat, it was the same message that I told you, the times 03 Jan 2009, chancellor on brink of second bailout for banks. Okay, see, this was not just a headline, it was a protest, okay, a digital rebellion. Satoshi was making a point, okay, that we are building a system that doesn't need these broken banks anymore. Okay, everyone was angry. People were really angry with this financial crisis. No one had an answer. Obviously, people were angry. So, someone just decided that, okay, we are going to change everything that is happening right now. Okay, changes comes only after when someone is pissed off with the system. But anyways, yes, so this was the very point that they were trying to make, that we are building a system that doesn't need anyone, that doesn't need any broken banks, and here we are. Okay, and that moment sparked a movement. Okay, one that questioned everything we know about money. Okay, everything we knew about money. Banks are there. Okay, the government is regulating things. Okay, we are spending in stocks, we are spending in share market. It was all about to get changed. So what was the real life impact that happened? Now, back in the early days, Bitcoin was worth practically nothing. Obviously, it was just coined into the market. No one knew what it was, and it was of no worth. There was an idea which was about to get executed. People tried executing it, but obviously the idea to take a full flow would take some time, right? So this was a time when Bitcoin was practically nothing. But when you fast forward it to today, one Bitcoin has been worth of as much as 50 lakhs. Okay, and this is all because people believed in this decentralized future. Okay, now with the centralized market, people were very disappointed. But when Bitcoin came into picture, things started changing. A revolution started. People started to actually get curious about it. It was earlier the tech savvies, it was the cryptographers, but then after that, everything started changing. Everyone started getting interested. Even me and you are today interested in crypto, right? We want to know what exactly that is. Even if we don't want to invest in that, we want to at least know what that is, right? So with time, eventually that trust started building up into this decentralized future. Okay, see, in 2010, I'll just give you one fun throwback over here. In 2010, there was a programmer. He was named Laszlo Hennis. Okay, and I don't know if I'm saying the name correct. Let me just put it up on chat. There you have it. Okay, now, he is the person who made the first real world Bitcoin transaction by buying two pizzas for 10,000 Bitcoins, BTC, right? So in 2010, this was he was a programmer, and obviously I told you that initially only some people trusted, only some people took that opportunity to actually sit and understand what exactly crypto is, what exactly Bitcoin is, and obviously they started investing in everything, right? But in 2010, this person, he just goes ahead and he made the first transaction. Okay, in the stories where I have told you in the session where we were talking about millennials, we also talked about Mr. Laszlo over there, right? We did learn that how waiting is important, and how that first step is important for that matter. Just because he made that step, just because he took that step of actually making a real life transaction, people started believing into it, right? just because of that two pizzas he did lose, right? Today this 10,000 bitcoin would have been some millions, right? But just because uh, even he had no idea and he had bitcoin and he just wanted to spend it, he just wanted to get rid of it, maybe whatever his thought process at that point might have been, but he made that transaction and he showed the world that no, even this money which is not physical, this digital money is going to work irrespective of what, you can buy real life things, and he bought those two pizzas, and that's where people started believing in it, right? Slowly and steadily today crypto has turned over every page, and today these bitcoins that you are seeing are so much worth, and everyone is so like so excited about it. And imagine if that person would have just kept this 10,000 Bitcoin that he had and he would not have bought these two pizzas. See, he's happy anyways, right? He got pizzas. Come on. uh, Obviously, food is important. And pizzas are wow, right? It's just very tasty. So, yes, it was worth for him at that point of time to actually spend those 10,000 coins and get happy. He was happy. And that's what matters. But then at the same point of time, he gave us a big lesson too, right? That, okay, he changed everything, the way that people thought about crypto. He just brought in that trust even more, right? And today if I talk about these 10,000 bitcoins that he have spent, if today we see it, it is 3,000 crores worth of pizza. That's a different level of richness. Okay, come on. He was rich by heart, he was rich by bitcoin. And those two pizzas today, if you go ahead and see that, he bought it for 3,000 crores, and it's not a joke, right? It's crazy, right? Well, now if you see because of all the stories, you would like to see that why blockchain was a great game changer, right? See, before blockchain, you needed a bank to send or receive the money, right? Transactions took days, involved high fees. Okay, every time I told you there are so many fees that is involved when you are doing one transaction, right? There are even if people are keeping your money safe in their safes, there are processing fees and everything involved in that. So obviously those days transaction fees were very high, right? So that was one thing that was existing before blockchain. And the records were hidden, like I told you, even for Harshad Mehta. Why was it possible? Because there are so many records, but it is all hidden, it's not public. No one knows what's exactly happening after you put the money in the bank. Even today, if you have to sit and see what exactly is happening in the bank today, you don't know it, it's all hidden, right? It is very centralized. The government has control over it, the companies has control over it, over the market and everything, right? And it was also prone to error or manipulation. The error might happen, it can, even while I am doing a digital entry, say in place of 7 I just put 8, it's a wrong entry, right? And we don't know who is exactly going to cross check that. Now it has already been done, the person who has done it has done and moved on, right? So the error margin was there. There was manipulation that could have been done. And one of the examples is, like I said, it's a very old example. Everyone has just took out all the juices possible from the story, but then this is what it is. What it is. It is the learning that we have um gained over the period of time, right? So manipulation can be done, error can be done, records are hidden, there are high transaction fees that is involved, and we need bank to send or receive the money. So obviously these were all happening before blockchain. But after blockchain came into picture, things changed a little. Okay, it was easy for you to send money directly to anyone across the globe in minutes. Okay, it was very easy to do that. Okay, even today when you do bank to bank transfer, if not for Google or Phone Pay or Paytm for that matter, if you're doing like the scanning and all that thing, but if even today, if we have to send a huge amount to someone, if say I have to send my friend 5 lakh rupees or 3 lakh rupees for that matter, even if I'm choosing NEFT as a process of sending the money, it will still take 2 hours to process that money, right? For the person to receive that money. But when Bitcoin came into picture, everything just changed. Okay, in minutes you can send your money globally anywhere. Okay, The second thing that made this a very revolutionary idea, a game changing idea in the market, was that it was recorded on a public ledger, so everyone knows what transaction has been made. Yes, everyone has an idea what is happening. Records were not hidden over here. Okay, see, there's no need to trust a third party. Okay, you no need not trust a bank. So even today, even in today's world, real life example take, even today when we do Google Pay, sometimes what happens is, if there's no net, or say if there is some problem or the other happening, okay, your bank might not be functioning, or anything and everything can happen, and when you are making that transaction at that point of time, processing, okay, processing, and for a long time it is processing, you will get stuck. You will be like, okay, did this money get deducted or not? Sometimes it is processed, the money is deducted, but it's just showing processing on your page. So obviously the person who is receiving the money is like, okay, I don't know if I've received it or not, because I haven't got the message of credit yet. Wow, what a confusion, right? But imagine if you're using Bitcoin at that point of time. It's faster, it's recorded, and you don't need any third party at that point of time. You will not have a bank over there. You're just sending it hands on, right? So that's the point. So the system is built on mathematics and consensus. Okay, so that is why this system works, and blockchain actually made the change. It became a game changer in the world, right? So did you understand till here? See, consensus is something that might not, some of you might not know, some of you might know. See, consensus means general agreement. In simple terms, if you have to understand, it means general agreement. Okay. Now see, let's move on. I believe everyone has understood what exactly, where exactly, blockchain, um how did it come into existence, who did it, where did it come from, how does this idea come into picture, right? So all of this has been explained. Now we will move on and try to understand what blockchain is. Okay, see, there's a simple definition. Okay, at its core, blockchain is a digital ledger. I've already always told you it's a digital ledger. It's a digital, basically notebook kind of a thing. Okay, so at its core, blockchain is a digital ledger, but not just any ledger. Okay, it's distributed, meaning it's not stored in one place. Okay, but it is across many computers worldwide. Now I've told you this term already yesterday. When there's a cluster of computer worldwide, what do you call it? Come on, tell me. If you know the answer, comment down in the comment down now. I don't know what I was thinking, but yes. um tell me what exactly do you understand when I say that there are many computers who are connected with each other worldwide, and all the data are stored in these computers. So it's not just one computer which is holding your data and transaction uh, data, right? It's so many computers. What are these called? See, they are called nodes. Okay. So the first thing, that it's not just any ledger. When I said it is distributed, which means there are so many computers out there and all of them have an idea about it. And all these computers together are called nodes. Okay. Second, it is secure. See, every piece of information is protected using a strong math, which is cryptography. I told you that earlier it was the tech savvy people and the cryptographers who were interested in this. Yeah. So, cryptographers were people who did maths. Now, see, sometimes I just sit and I just think that my maths is so bad. Thanks to all the cryptographers in the world, they did all the hard math and made our life easy. So, yes, that is something that I'm very thankful about. And I think you are also. So, if you are, just comment that down. But yes, it makes it secure. Okay. So, it's a digital ledger, it's secure. Okay. The third very important thing, okay, is that it's transparent. Okay, anyone can see the records depending on the type of blockchain. Again, I've told you that each blockchain will have their own network. Okay, like Bitcoin has its own network of blockchain, Ethereum has its own network of blockchain, Solana has its own network of blockchain. So each of them are working on their own set of blockchains, right? So depending on that, it's very, very transparent. And once something is written, it cannot be changed. That's what makes it more transparent, right? If I wrote down today something, it cannot be changed in the next moment also, or tomorrow, or day after, or any day in the life. Okay, it's just there as a transaction history. Now let's break down the word blockchain. It's not something that is not known to everyone, but it is also something that not everyone understands. So let's just break that down. Let's split it into two parts. Okay, the first part is block, and the second part is chain. Okay, now let's start with block. Okay, yesterday I was explaining this to you. I'll just do it again. Okay, so think of a block as a container of information. Say, for example, if this is a block, okay, this is a container. Now it has all the information. Okay, this transaction, that transaction, this transaction, that transaction, and it has all this information is over there. Okay, you can see this. Yes, you can see this now. Okay, so this is like a container of information, and it holds a bunch of transactions. Okay, it has all kind of transactions. Okay, if five people send Bitcoin to five others, all those transactions are recorded together in one block. Okay, so this is somewhere all the information is kept. This is a block, right? Now let's get down to chain. Now each block, each of these blocks, say for example, if we have one more block over here, okay, okay, so we have one more block over here. Okay, each of these blocks that you see over here, this is also a block and this is also a block. Okay, both of them are a block. Now each of these block, it is linked to the one before it. Say for example, if this block is something that is absolutely new, and this is something that was like maybe written yesterday or day before yesterday, or just an hour before. Okay, this is one block. Now this is a past, this becomes a new transaction. Okay, this is filled, this block was filled, this becomes a new transaction. Okay, both of them are now linked to each other. Okay, both of them are now linked to each other. You can see this like this. Oh, broke down the link now. I'm just trying to explain you, but yes, this is the chain. This is now connected with each other, right? This is like a chain. Now each time there will be a transaction happening, each time there will be another block that comes into picture, and it is all chained together. This creates a chronological timeline, right? If this was the first transaction ever made, then this is the second, this is the third, fourth, fifth, sixth, like that. As many transactions are made, it's all stored. Okay, so this creates a chronological timeline of everything that has ever happened. Okay, so blockchain is equals to a chain of blocks, each carrying transaction data connected securely. Okay, let's do an analogy now. Say, uh, okay, imagine a train. Okay, we have all seen trains. It's our one of the favorite mode of transport. Yes, we have all seen trains, and we have seen that each carriage that we see of a train, it's like a box. You've seen the carriages, right? Those big carriages. So they are like a block. Yeah, the track the train runs on is the chain. Okay, now who's riding the train? You, me, thousands of others. Okay, we are the nodes. I told you that each computer is keeping track. Today I take a crypto, make a transaction, put money, do whatever. My blockchain network is actually keeping that information. My computer is keeping that information, and that's why the nodes have all the information, right? We are all nodes, because you have an information, I have an information, all of us has an information, so we are nodes. Okay, now before a carriage can be added to the train, everyone on board must agree to it, okay, that it is legit. Okay, this is called consensus. Okay, the general agreement has to be done. All of us has to be on the same page before a transaction is actually noted, right? So that's exactly what it is. If it's a train and all the carriages are there, but we want to add one more carriage to that train, it is us, the nodes, you, me, thousands of other people who have to agree and who have to like, obviously we have to check if it is legit or not. So once that is something that is in our mind, this is called consensus. Okay, then after this agreement is done that okay, this is legit and everything, then a block is added. Only when everyone agrees to the transaction inside is valid, only then a block is added. Before that, it can't be added. Okay, and once it's added, then what? See, you can't remove or you cannot change anything. Okay, I gave you the train analogy, but if you think about it, in a train we can like in real life, if you think about it, in a train we can add a carriage anytime, remove it anytime, right? And there's no one to question about it, and you don't have a transparency of, if there were there 12 and now it is 13, or was it like 12 always, or is it 11? Can be easily manipulated. Number of blocks that are in a train can easily be manipulated. But it can't happen when it comes to blockchain, because again, you cannot remove or change it. Once everyone has agreed on that, once everyone has verified it, once everyone has seen that okay, this is legit, no one can anymore change it, because now it has been recorded. Okay, it's locked in a place. It's like sealed carriage. Okay, it's like a sealed carriage on a moving train now. Okay, so see, let's see. We have done this comparison even yesterday, that how is stock market and crypto so different. Okay, so even today we are going to just tackle that, because we are understanding blockchain today. So say you want to buy shares of a company. Okay, now we are seeing a traditional stock market and we are going to see crypto. Okay, so for a traditional stock market you will need a broker, right? Then the broker will send you a request to the stock exchange. The clearing house, it will settle the transaction, and it can take 1 to 3 days to fully process. All of this is controlled by centralized institutions. Okay, from starting from where, when you thought about investing and you just came into investment, from there to the point you invest, there is someone always involved in it, right? But when it comes to bitcoin, when it comes to crypto with blockchain, what happens? You want to send a Bitcoin to a friend, you use a crypto wallet, hit that send. The transaction is verified by the network of computers, and it gets bundled into a block and added to the chain. All within minutes. There is no middleman involved in this. This is all within minutes. So you are not exactly taking 1 to 3 days, or even 24 hours for that matter. It is all happening in a minute. So in a summary, if we have to see, stock market is practically slow, it is centralized and permissioned. Whereas when it comes to crypto blockchain, it is fast, it is decentralized, and it is also open. Okay, so how do we visualize it? See, it's a great time to show. See, we put it in your head now. Okay, like visualize it like this: that a transaction is created, it's verified by other nodes, grouped into a block, and added to a chain. Okay, let's do it over here like we did it. Okay, a transaction is created. I created, say for example, this transaction. This is a new transaction that I'm going to create. Oh my god, I have drawn so many things on this. But all right, okay, let's think that this is the transaction. Okay, this is a transaction just created. Now all these nodes that are present over there, all these nodes, they will verify it. Okay, now this will be grouped into a block. Okay, say for example in Bitcoin, Ethereum, wherever, it will be blocked. It will be first blocked and then added into the chain. This is how it happens. Okay, all right. Now you can even say that, like see, Think Alice sends 500 rupees worth crypto to Bob. Okay. Or let's give it an Indian name. Alisha does it to Babita. Okay. The system checks that Alisha actually has the money or not, bundles it with other transactions, and locks it into the block. Okay. Now everyone in the network says, cool, this looks good. And boom, it's just added to the blockchain. Everyone just agreed that the transaction is legit. Yes, this is good. She has the money. She can send it to Babita right now. So, yes, it's fine. Blockchain, right? Now, why does this matter? Because blockchain removes the need to trust on any one person or company. Instead, we trust the system, which is transparent and can't be tampered with. Okay? Think of it like a digital teamwork. No single boss, just a group of working together to keep everything fair and accurate. Group of computers working together, group of nodes. Yeah, we are the nodes over here. Anyways, let's move on. That's what Bitcoin is all about, and sorry, blockchain is all about, and I believe that you understood this. Now we are moving on with the fact that why is blockchain so secure? See, we all know that we have all time and again we have talked about this because it is transparent, and because everyone knows about what transaction is going on and there is no middleman involved. That is why it is something that is so secure. Okay, we understand how blockchain works. We understand what exactly blockchain is, right? So it's a super important questions everyone ask about. Okay, so let's break it step by step. We know this, but let's break it step by step now. See the magic of cryptography. There's this the first part that we are going to actually tackle with is the magic of cryptography. Cryptography is like a secret sauce of blockchain. Okay, any food bought, like whenever you go to a restaurant or anything, they will say there is a secret ingredient in this particular food. Okay, and it's a chef special, no one knows about it, right? So cryptography is also like a secret sauce of blockchain. Okay, it's a way of protecting information using complex maths so that you can see what is happening, but you can't change anything that has already happened. Okay, so because of cryptography, it's all complex maths over there, and you can obviously see what is happening, but if something has already happened, you cannot really change it anymore. Okay, so see, the most important tool over here is something called hash. Okay, a hash is like a digital fingerprint. You feed data like a transaction into a mathematical formula. Okay, because obviously all the data that you are collecting over here, the transaction that you're going to make, it's actually going into a computer, right? So it's like a mathematical formula that is being used now. Okay, it gives you a unique string of numbers and letters. Okay, when you feed this data, you get basically a unique string of numbers and letters. Even a tiny change in the input will give you a completely different hash. I told you, hash is a tool. Okay, so say for example, say for the transaction part of it, you are typing, you are writing that, okay, I sent 500 rupees to Ramesh. Okay, so now one hash is created. Say the hash is created as F13A1B. This is the hash. Now you change this sentence that you have done. You say now you change it to uh, this is after the hash is created. Okay, now you are changing the statement again. You say I sent 501 to Ramesh. Another hash is created, which is completely different. This will be 9D82AC, say for example, like that. So now if someone tries to tamper with a block, even by a single rupee or letter for that matter, the entire hash will break and the system instantly knows that, okay, something is off. Okay, so see, this is how it will be. I have already written that for you, so I will just paste that into chat. This is the first hash that was created because of the message that you did. Now change, when we change it, we have a completely different hash. Yeah, this is a completely different hash. Now any number change, any letter change will completely destroy these hash, right? So this is what happens. This is hash. Okay, that's the magic of cryptography because it's all maths over there, right? Now let's move on and see tamper proof blocks. Okay, now these are blocks. These blocks are linked to chain. But can we tamper with it? See, each block that you are seeing over there on crypto is all containing data. All of them has a data. But all these data that is being contained over there has a unique hash. Okay, each statement, each transaction, everything has a unique hash over there, like I showed you even on the chat back box. You can see right now, for one statement there's another hash, for other statement it's another hash. Now if we try to change this, the hash will break, right? So basically here is what happens. So how it is tampered proof? Because all of them are containing data, all of them has hash. It also stores the hash of previous blocks. Okay, one block is there. It's not that only that block's hash is contained, every block's hash is now contained, right? So if someone tries to mess with say block 42, they'd not only have to fix that one hash, they'd also have to change block 43, 44, 45, so on and so forth till the recent one. Okay, so they will have to change everything. Task right, you have to change everything. This is practically impossible. Okay, this is practically impossible without enormous computing power, and that's where the consensus mechanism comes in. Okay, so you generally you have already agreed to it, the block has been created, the hash has been created, and now if you want to change it, you have to actually go through all this thing, and you can't do that, right? And that is why this mechanism works. Now, how everyone agrees on this consensus? Okay, see, in the blockchain world, not one single person is in charge, right? It's not that it's a place where one person is in charge or a government is in charge for that matter. So, how do we know that which transactions are real? See, this is one question that might have come on everyone's head, but no one asked. That is that, okay, if everything is computerized, if there's no single person in charge, how are we knowing that, okay, this particular transaction is real or not? See, this is where this consensus mechanism comes in. Okay, they help everyone in the network to agree on what's valid. Like I told you, it is something where you are agreeing on it, right? It's not that just randomly some number has been put and just randomly something has been done. It is something that everyone agrees on, and only then a particular step is taken, right? So let's look at two of the most common methods when it comes to consensus mechanism. One is, I've told you this even yesterday's stream, we have talked about this: proof of work and proof of stake. Okay, for the ones who know it, well done. For the ones who are new and who don't know about it, let me tell you. See, think of it as a puzzle challenge. Okay, so the computers, which are the miners, they race to solve through a math problem. Okay, there are a lot of computers. They sit together and they solve one math problem. Okay, now this math problem is very complex. It's not that 2 plus 2, 4. No, it's a complex maths, right? The first one to solve it gets to add the new block to the chain. So this computer, they are doing a competition kind of. All these computers who are solving the maths, the first one that will actually solve the math will get to add a new block to the chain. Okay, now this is super energy intensive, but it is very secure. Okay, so imagine a massive Sudoku puzzle. Okay, whoever solves it first gets to lock in the next page of the diary. Once it is in, it is in. You can't erase it, you can't change it, right? This is proof of work. Next is proof of stake. Okay, this is used by Ethereum 2.0 and others. Okay, what do you do over here? This is more eco-friendly. Like I told you, this is more like they use more energy. Bitcoin uses proof of work and it uses more energy, but when it comes to proof of stake, it uses less energy, and it is usually used by Ethereum 2.0 or others, right? Now, say instead of solving these puzzles that they have been doing, they were all competitive and they're like, okay, who's going to solve it first? Here, it is not the thing. Here, instead of solving a puzzle, validators are randomly choosing to add the block. Okay, it's a random random selection that has been made. But only if you have staked, okay, only if you have staked, you have locked up something, some of your crypto. Stake is like locking up your coins, okay? So only if you have staked some of your own crypto as a guarantee, this works, okay? Now if they try to cheat, they lose their money, right? You have already put in your money, you have put in the stake. Now if you're trying to cheat, you will lose the money, right? So that's how it is. So see, I'll give you example. See, it's like being chosen to write a class journal. Okay, so say you, for example, there's someone called Rohan. He was asked to write a class's journal, but now only if you have promised to donate 1,000 rupees, then you can write it, first of all. But if you're caught lying, what will happen? In that class journal, if you're lying, what will happen? You will lose that 1,000 rupees that you have already donated, right? So you are extra careful to be honest, right? So that's how it works. This is how we make sure that the consensus is uh, they are made, right? This is how we see that everyone agrees and validates, and only then a block is made, and it is then added to the chain, right? See, imagine, I'll give you one more example. Okay. Imagine sending an important letter in a sealed envelope. Okay. This is with a tamper proof seal. You have seen those government papers also, envelopes also, where they put that red color seal on the papers, right? So if someone tries to open it and reseal it, it will become very obvious, right? It will become very obvious. Even for the parcels that you get from different online shopping places, right? The cartons that you get, you know that okay, it has been tampered, just because you saw that, there is some kind of crack or something has happened, and people have just resealed it. It is very, very visible to the eyes, right? Same goes with the blockchain. Okay, once a block is sealed, it is confirmed. You cannot change the contents without everyone knowing it. Okay, that's why blockchain is called immutable. Okay, it means that the data cannot be altered after it is added. So this is what it is. Okay, now again, let's see how we can compare it with the traditional stock market. Okay, so for the stock market, we talked about share market earlier. For stock market, records of trades are stored by centralized system. If an insider tampers with the records or the system's history, history can be rewritten. Okay, you can easily do that. Okay, and there is a lack of full transparency when it comes to stock market. Whereas when we come to blockchain, the records are permanent. It is visible to everyone in the network, and zero chances of insider tampering or hidden changes, because again, it is all very concrete in that manner, right? It's all very transparent. So what did we learn till this time is that blockchain uses hashing to protect data. It links each block to the previous one. It uses consensus mechanism to agree on what's true. And once something is written, it's set in stone. Nothing can be changed, right? Now let's see. We learned about blockchain a lot. Now let's see where exactly it is used when it comes to real world. Okay, see, this was all textbook, whatever I explained you. Now it's time to get into the real world, because no, it's not just for cryptocurrency. Okay, the blockchain is not just for cryptocurrency. Here's where it's making a real difference. Okay, so supply chain tracking. Now imagine you're buying organic honey. How do you really know where it comes from? Companies like Walmart are using blockchain to track every step, from the farm to the factory to the shelf. Okay, so today companies like Walmart are using blockchain to actually track each step. Earlier, it took 7 days to trace the origin of the food, but with blockchain, it's literally 2 seconds, right? So that's why everyone is using it. Now, one of the real example is that in IBM. Okay, so IBM partnered with Walmart to build a blockchain system that tracks the journey of mangoes and pork in real time. Okay, so this is possible even for it's even possible to use blockchain with the supply chain tracking. Okay, now let's go to healthcare. See, medical records are super sensitive and they're often scattered across clinics, right? Blockchain helps create a secure tamper proof system to store and share these records. For example, say say there is a small country called Estonia in Europe. Okay, now they use blockchain to secure its citizens' medical records. Patients control who gets to access their medical record. Right now, see, because everyone has your medical record today, because it's not it's a centralized market. They know that okay, you have got diabetes, so they'll give you ads related to diabetes. Oh, you have kidney stone, so they'll give you ad related to kidney stone. But this is an information, a sensitive information, which you might not want to distribute to everyone, right? Which you might not want everyone to know, but it is still known because again, it's in a centralized environment. But when it comes, and you can't control it, it's not in your control. But when it comes to Bitcoin, it comes to blockchain, because you are in control, you get to choose who gets the access to your medical records, right? See, it's also helpful in voting. Think about how many problems come up during elections. Okay, people say that okay, you know what, this is tampered. People have just no, this EVM has been tampered. We are putting this, say we are giving vote to this XYZ party, but it's still going to this ABC party, and we don't care about it. Okay, so there is a lot of fraud that can be associated with it. There is a lot of miscounts. There are delays that can be associated with it. But when blockchain comes into picture, it allows transparent and tamper-proof digital voting. Okay. So in Estonia only, I'll tell you, this is a real example actually. In Estonia, 99% of government services, including voting, it's run on blockchain because citizens can vote online with full security. And now everything is also transparent to everyone, right? India has got a long way to go. Hopefully, tomorrow, in the future we will get voting through blockchain so that there is no confusion of who people are voting for. Anyways, the next thing is digital identity, where blockchain can be used. See, instead of relying on multiple logins and passwords, blockchain gives you a digital identity so that you can fully control it. Okay, so you have a digital identity which is in your control. Say, for example, Microsoft is building a blockchain based system where users can verify themselves without handing over all their personal data. Wherever you go, you have to give your personal data time to time, right? But that's something that you don't have to do if you're using blockchain as a digital identity. Okay. So blockchain is like a digital notary. Every action gets recorded, time stamped, and verified, and no one can change it later. So that's why it's absolutely transparent, and people know what's going on, right? Now, how is blockchain reshaping financial markets? Now, let's imagine that two people, Ravi and Meena, okay, both want to invest. Ravi decides to buy Reliance shares from the stock market. Meena wants to buy Bitcoin. What will happen next? Anyone has an idea and they want to share it with us? See, we'll go through Ravi's journey first, which is a traditional finance, right? He opens a demat account with a broker. Okay, it can be Zerodha, Upstocks, Grow, anything. Okay, etc., etc., etc. He places an order through the broker. Okay, the NSE, that is National Stock Exchange, it matches it with the seller. The trade goes through, but the shares settle in his account after 2 days. Okay, multiple people are involved over here now. There's broker, there is exchange, there is clearing house, and there is a bank, right? So time taken is 2 days. Middlemen is, yes, they are involved, and transparency is very limited. Ravi only sees what his broker tells him. He can't see further more than that. Now let's go to Meena's journey, which is a crypto market. Okay, she will open a crypto. She will, sorry, open an account in a sorry, she will open an account on a crypto platform. It can be Coin, DCX, it can be Binance, anywhere, etc., etc. She buys the Bitcoin. The transaction is recorded instantly on the blockchain. She doesn't need a broker or exchange approval. The transaction is publicly visible and permanently stored, right? So here, the time taken is minutes. The middlemen, are they involved? No. The transparency, it is 100%. Anyone can verify the transaction on the blockchain, right? So this is what makes crypto different. Okay, you have control, it is decentralized. So it's a blockchain network, unlike the stock market where it is centralized. So there is SEBI, there is NSE. It has trading hours, there is limit. There are weekdays only. On weekends nothing happens, market is sleeping. Anything big also happens during the weekend, it is only on the Monday that it will take any action, right? But when it comes to crypto, there are no holidays over here. It's 24/7. The transaction speed is literally 2 days, right? T plus 2 days, the day that you have actually done the transaction, plus 2 days to get everything verified, right? But when it comes to blockchain, it is literally within minutes. In crypto, it's within minutes. Trust system, you have to trust your broker. There is a middleman, there are regulations that you have to trust, right? But when it comes to cryptocurrency, it is all maths, it is cryptography, and it is consensus, right? Visibility, when you talk about visibility amongst the two, there is only a limited insider visibility, and crypto is on the other hand open to all. Okay, now, there are some traditional giants who are adopting to blockchain. Big players, they are actually seeing the value in the market for blockchain. They see how blockchain is going to be a future. So there are big giants, traditional giants that are actually coming down to this very setup. See, one is NASDAQ. Okay, now this is the American stock exchange, and it has started using blockchain for private share trading. It increases transparency, and obviously it reduces the paperwork. JP Morgan has started this. It is one of the biggest banks in the world, and they have created their own JPM coin using blockchain to transfer money between global branches in real time. NSE India is also using it. Okay, so they ran a pilot program using blockchain to handle e-voting for shareholders of listed companies. The result, it's obviously more secure and transparent voting. Okay, so NSE India has also done it. So wow, right? So, what's the big deal over here? See, blockchain is not just a tech trend, it's changing in terms of how we buy, we sell assets, we record and we verify ownerships, we eliminate unnecessary delays and fees. Okay, so while stock markets are still the go to for many, the crypto market shows us what a faster, fairer, and more open financial system could look like, right? So the change will absolutely happen eventually. It's not that it's going to happen today and tomorrow, nothing like that happens, right? So that's what makes it different. Now, see, the final thought for this segment is that the stock market is like an old banking system. It works, but it's slow and it needs middlemen. The crypto market is like UPI for assets. Okay, it's instant, it's transparent, and it's peer to peer. And whether you are an investor or just curious understanding both systems, this gives you the power to make a smarter financial decisions. So that's why we covered this. Now, let's see the future of blockchain. Okay, so will the blockchain change the world? Okay, this is something that everyone has this in mind. Okay, can it change the world? Yes, and it's already starting to. You saw that even NSE India is using it, JP Morgan is using it, right? Everyone is trying to go to blockchain now because it's more transparent. Yeah, now this blockchain is not just about crypto, it's about removing middlemen, right? It's about trust through tech and giving people more control over the data and the money that they have, right? Now, we will tackle some of the questions that people will have in mind after listening to so much about crypto and about the blockchain that we have discussed today. And I hope that all of you have understood what we are talking about. And if you still have doubts, if you still have questions, if you still want to understand something, do comment that down below so we can tackle your questions in simpler manner so that you understand everything and you do not need a middleman even for understanding something, right? See, I know after listening to everything, there will be people who will be like, okay, let's start investing in crypto. But there are certain things that you have to keep in mind. And every session I keep on repeating this, and I will keep on repeating this so that none of my viewers falls down into a trap. There are always hypes which you cannot follow. Okay, if there is a hype going on for, oh, my XYZ friend is buying crypto, oh, he got so much from crypto, oh, did you know the story that, this person just invested $12 and he got about what millions of dollars today, $500 million or something, just because of crypto. Let's go and do it. Invest it. See, it's very easy to follow the hype. But then at the same point of time, when you follow that hype and you fall down that lane, no one is there to actually pick you up. You have lost everything, right? So let's not do that. Let's not follow the hype. Let's do our own research. Even if I am telling you something that, you know what, guys, go ahead, go spend some thousand rupees on crypto today. Just because I'm your trusted partner, I am your trusted partner, doesn't mean that you will not do your own research. Because no one, absolutely no one, can guarantee that there is a sure short reward, sure short return, guaranteed return with crypto. There is always risk involved when it comes to investment. So only if you have a risk appetite, you go ahead and you invest. If you do not have a risk appetite, do not fall for any kind of hype, and do not get misguided just because you were feeling FOMO. Okay, so that is something that you need to remember. Now we'll just tackle some of the questions, but I've talked so much and not kept myself hydrated. I need water. So yes, let's take 2-3 minutes of break, have some water, do some work if we have to. Yes, and then get back to our live session. See, feel free to ask questions if you have any, and then we will definitely answer some of the common questions that people ask or might have in their mind just because they have heard about crypto, or they have heard about blockchain and Bitcoin, and they have started understanding a little bit. So yes. Yes, I am using my phone for now. I just wanted to reply to my house members that they're not allowed inside this room right now. I have a dog, so if this room is open, he will just come and he'll just keep disturbing me, and that is something that I don't want as of now, because we are talking about crypto, and I don't want to get distracted with that little baby. So yes, that's why my room is closed, and everyone wants to know what's happening inside. So I just told them that please relax, wait for some time, I'll let you know what is happening. Anyways, I hope all of you are now hydrated. You had your water, you had your break, and you are ready for new informations. And if at any given point you have questions, if you want to know something about crypto, if you want to know something about blockchain, if you know something new, something about new trends or anything like that, be my guest and ask that questions in the chat box or the comment sections below. All right. See, people are today also curious about Web3, NFTs, DeFi, and smart contracts. What are they? See, Web3 is the next version of the internet service where users own their data, not the big companies. See, today, the web that we are using, okay, uh, any information, it's either stored with Google, or it is stored with Meta, or it is stored with X, somewhere or the other. Your data is absolutely stored with someone or the other, right? So, your internet provider, everyone is keeping your data. Your data is absolutely scattered and it's not at all safe, right? So Web3 is somewhere, you will have control over your data, and the big companies won't have that control anymore. So yes, Web3 is definitely coming into picture, and I'm pretty sure all of you will be happy about it, because finally we'll have control over our data, and big companies won't be manipulating with us, right? Then there is NFTs. This is non fungible tokens. See, this is a unique digital item, like there's art, there's music, there's collectibles, all these unique digital items. So you can buy and sell it. Okay, so this is the using NFTs, you can buy and sell it. Then there is DeFi, decentralized finance. This is a financial service, like loan, insurance, trading. You can do anything over here without banks. Today, if you have to take a loan, you have to go to bank. But when you are in crypto, and you are using this blockchain, and all the altcoins or the bitcoins or the ethereums, then you can do it from DeFi. So there is no bank involved, and you can easily do the loan and the insurance and trading things. Yeah. Then there is smart contracts that people are curious about. See, this is self executing agreements, written in code. Okay, so no lawyers, there is no delay, there's just trust built into the system. So there are smart contracts between parties. Okay, now see, for example, uh, how are artists selling digital art to Ethereum, on Ethereum? Okay, so they're just putting they don't no longer they'll need galleries or agents, right? They don't need that. They can just mint their artwork as NFT on Ethereum and sell it directly to the fans, and then they can earn royalties every time it's resold. Okay, so it's like, if say I am an artist, and I say sold this art worth nothing today. See, look, look. When I'm bored, I do this. But anyways, anyways, so this is the art that I want to sell. What I can do, I can mint this artwork as NFT on Ethereum. Now my fans, whoever is my fan, that person will buy it. Now say that person is like, okay, let me sell this. Let me make money, because this is bought by him now, right? Him or her, whoever. This is bought by that person. So he resells this. The moment he resells this, I get the royalty. So I'm making money, right? So that's what happens when you have smart contracts. Okay. So I'll give you an example. There's this digital artist called B Play. He sold an NFT for $69 million. I really Okay, yeah, I hope get out of that, get out of that. It's a hype, it's a hype. I have to do my own research, and then only then go ahead and do that, right? That was a hype that I just created, right? Oh, $69 million. And then I was also like, wow, right? But this is a hype, and neither you nor me should fall for this, right? Anyways, okay, future jobs in blockchain. Okay, blockchain is creating completely new career paths now. Okay, like there is blockchain developer, there is smart contract auditor, there is NFT strategist, there is DeFi analyst, there is crypto lawyer, there is Web3 community manager too. So even non techies are in demand. So don't think that because it is crypto, it is blockchain, it's always tech, and tech. No, even non techies are in demand. So if you're someone who's looking for job, and you think that, okay, is there a future of jobs in blockchain? Yes, obviously there are. So I will just paste it down for you, all the opportunities that you can actually go ahead and look for as a non techie. I'll just put that first and then start talking again. Okay, so these are the things that you can actually go ahead and see for. So you can see blockchain developers, smart contract auditor, NFT strategists, DeFi analyst, crypto lawyer, Web3 community manager. All right. Okay. Now, so, how is blockchain going to be, inculcated in your daily life? How is it going to get involved in your daily lives? So, imagine this. Okay, your Aadhaar, your PAN, and the bank KYC. This is all stored securely in blockchain. Okay, you apply for a loan, the bank will verify everything in seconds, and there is no photocopies, no running around, no delays required. Wow, this is like such a dream, right? Like every time you have to, just get a loan, it's such a task because you have to run so much from this window to that window, go to window 6, the 6% will say go to window 7, the 7% will say go to window 13. So it's a task, it's a task to get your loan money. But when blockchain will come into our daily lives, obviously using this Aadhaar, the PAN, and the KYC that the banks do using this, first of all, the loan will be given in minutes, the loan will be verified in minutes, and there are no photocopies or running around that we are doing. We're just sitting on the like comfort of our house and we're just doing it digitally. That's so good, right? And also it's very good for the environment. It's all paperless, right? It is instant, it is stamp approved verification. What do you need more? Like, all thanks to Bitcoin, all thanks to blockchain, that we will be able to do that in the future, right? If today we are not doing it, yes, definitely tomorrow, or any day in the future it might come into picture. But yes, all thanks to them that this is going to be an easier task for people now, right? But for that, you will definitely have to understand cryptocurrency at least, and once you are done with that, do your own research, and then go ahead and do whatever you like to do with that crypto. With that, it's been an exciting journey. We have dived into the world of blockchain and crypto, and all this curiosity that you have, with an open mind and willingness, you have learned so many things, and there are so many things changing around us. So, see, there's one thing: when we talk, we think that you need to be a techie when it comes to crypto. It's not like that. You do not have to be a techie to understand crypto. All you need is just a curiosity, open mind, the willingness that my viewers definitely have. Yes. So please explore this digital world, that because it's all going to change around you, and when you are informed, it makes things easier because you are making well informed decisions, and obviously you are making money. You're making money while sitting at the comfort of your home. Now, see, blockchain is shaping the future of money, its identity, the business, and even the governance is going to change. It's already ahead of the curve just by being here, right? There are countries that are using it. There are companies that have started using it, and it's not too far when all of us will be in line with blockchain. So keep asking questions, keep learning, and who knows, maybe the next big idea in Web3, NFTs, or DeFi comes from you, right? So let's meet tomorrow at this live session, and tomorrow we are going to discuss about more interesting topics. We are going to know Bitcoin, Ethereum, and altcoins, and what is the difference between them, which one you should choose to really invest in. So if you enjoyed this session, feel free to share your thoughts. Follow us for more updates, and let's keep this conversation going. Okay, stay curious, stay safe, and keep exploring. This is me, Juhi Singh, signing off.